All right, guys, back to work. We're not quite done yet. One more day left till the holiday coming up here. It is Tuesday evening. It's the 23rd day of November 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for tomorrow. Not just any Wednesday, last full day of trading of the week. Got a ton of news tomorrow. Some nice big moves on the charts tonight, so really excited for a final day in the trade room tomorrow morning before we go off and enjoy Thanksgiving. I'm going to go over all my favorite trades in tonight's video. I'll also talk about some of the stuff I'm going to avoid tomorrow to keep myself out of trouble. That way you can stay in the green as we go into the holiday weekend here. Before we jump into the video tonight, as always, make sure you subscribe to our YouTube channel. I publish these videos, besides, of course, the holiday weekend coming up here. I publish these videos every evening on this YouTube channel. Make sure you subscribe. A lot of the stuff is time sensitive, so hit that little bell icon so you always get notified when I post something new. If you have any questions for me, drop those questions in the comments section below. I would love to answer any questions that you might have along the way, so don't be shy for asking questions. And if you enjoyed this video as much as I enjoy making it, do me a favor tonight, hit that like button. Give me a Thanksgiving thumbs up on this video here tonight. But all kidding aside, though, thank you so much for tuning in and watching tonight's video. But enough of the intro, though. Time is ticking a little bit late to the party here tonight. Wednesday. Boy, we got a lot to cover here tonight in this video news. I got a bunch of news tomorrow, tons of news tomorrow. And as you can see, we got a bunch of ranges on the charts right now. Got a range on the S&P, range on the Nasdaq, and it looks like a new range on the oil. Anytime we see ranges, what do? We buy low, we sell high, we trade the rotation, and we trade breakouts. So we're looking for failures, looking for breakouts. There's plenty of great trades for Wednesday, the day before Thanksgiving. I want to make sure we're ready for that here tomorrow. Let's see, before we jump into the charts here tonight, let's grab a look at the schedule for tomorrow, because as I mentioned earlier, there is a ton of news tomorrow. In fact, tomorrow might set the record for how many news events we can squeeze into one trading day. You'll notice a bunch here tomorrow, right? As you can see, Thursday, of course, is wide open. Friday is going to be an early close. You can trade on Thursday and Friday, but be careful. Thursday is usually, what you want to remember is when the markets are open, but the banks are closed, the schools are closed, things like that. Just remember, the volume will be a little bit lower, and you got an early close on Friday. So just be careful if you are trading the futures markets over the holiday. Tomorrow, of course, we look at the news tomorrow. You can see there is going to be quite a bit of news tomorrow. We've got a bunch of news coming out at 8:30 Eastern Time. Durable goods, GDP, and international trade, along with the jobless claims report at 8:30 Eastern Time. Then later on in the morning, we see another batch of news. At 10 a.m., we get the new home sales number. And what would arguably be the most important news tomorrow is that personal income number. That is the number the Fed uses whenever they're trying to decide whether or not they want to raise rates. It's been well known for a while now that the Fed really leans on that personal income number, the personal outlays number, which is tomorrow at 10 a.m. Eastern Time. So if I had to guess, it's going to be difficult, obviously, with all this news coming at 8:30 and 10 o'clock. It's tough to guess which news events are going to play into whatever. But if I had to guess tomorrow where the biggest bang for the buck would be, I would say probably that 10 o'clock top of the hour here. So if you could only be at your desk tomorrow for an hour, that kind of 9:45 to 10:45, 11 o'clock would definitely probably be where the best setups will be tomorrow in our trade room. So I got a bunch of news tomorrow. Remember, we are not going to trade the news, right? We will, of course, wait for the news to come out. So big block of news tomorrow at 8:30 Eastern Time. We'll make sure we wait for the news to come out and then trade the reaction from that news 8:40, 8:45 into that 9 o'clock hour. And then, of course, we got that 10 o'clock block of news coming out later on in the morning. Again, we're not going to trade. We're on top of that news. But by 10:05, 10:10, 10:15, we should have a good understanding of what the news was or how the market's reacting to it. And we can trade accordingly from there. If you are around tomorrow afternoon, we got some oil at 10:30. Almost forgot about that. Don't forget 10:30 for the oil report tomorrow. If you're trading oil tomorrow morning, remember that cutoff, 10:15 to about 10:40, right? I always try to give it a little bit of a buffer, 15 minutes before and then 10 minutes after. So be aware of that if you're trading oil. And if you're hanging around tomorrow afternoon, the FOMC meeting minutes at 2 o'clock Eastern time. That's right, one more news event tomorrow afternoon. That might be a little bit of an afternoon delight tomorrow afternoon before we go off and enjoy Thanksgiving on Thursday. So there is no shortage of news here. 8:30, 10 o'clock, 10:30 oil report. And again, the 2 o'clock FOMC meeting minutes. Again, we're not trading the news. We are waiting for the news to come out, and then we're trading the market's reaction, finding our momentum, find our channels, our ranges, and our entry setups from there. Now, of course, I'm going to go over the entire plan tonight, but tomorrow morning, 8 o'clock Eastern time, you better be there with me in the trade room. I'll put all the membership links you guys need, the description of the YouTube video, or I'll put a big link for you guys right below me tonight on the website. Grab that link, get registered, and I'll see you tomorrow morning at the opening bell. Back to our charts here for tonight. A lot of ranges on the charts. We're trading rotation. We're trading breakouts. We're trading failures. Let's jump into the S&P first, and let's start getting our hands dirty and getting ready for tomorrow. What's the most important factor right now on this S&P? We're range bound, obviously. You can definitely see that trading range right in the middle. And remember, ranges love to rotate, right? They love to rotate. So the market will go down, it'll rotate up, we rotate back down, we rotate up. Usually the amount we go below the range is roughly equal to the amount we go above the range, right? So now we're going below the range, and we have to anticipate the market wants to make a run back up around that 4,700 level, which you can also see is a big round number. The market, of course, now is rotating as we go higher. That pendulum swing at 4,700 is an easy kind of milestone here for the bulls. If the bulls can push through that 4,700, they've got that big top that we had earlier on in the week, right? On Monday's high, that 4,740. Buyers would love to get that price right back up to those all-time highs. If the sellers have their way tomorrow, they'll get down to retest those major lows. And of course, they've got some levels marked up here waiting down around 46.30 and 46.15 area. So most important thing right now, buyers definitely have control of this momentum. The sellers don't have a lot to work with right now because, of course, momentum is very bullish, and we have this, obviously, this rising support trend, this support trend line coming up across those lows. Knowing that we have rotation right now, I would love to get in on some traps below this low, right? Get in off some of these areas of support on the way up to completing that pendulum swing. If the market keeps on going, we can look for breakouts going higher, right? Kind of breaking free of that trading range as well. So buying pullbacks, trying to complete that rotation, and then of course buying those breakouts as we go higher. Again, you want to be a seller right now. It's going to be a little more difficult to be a seller until things change. Okay, how do we buy this market? How do we sell this market? What if price goes up? What if price goes down? Again, what I'd like to do is I'd like to get us just underneath this prior swing. I really like this area down here for a trap setup. Trap pattern, maybe a failure pattern. Now, what you want to think about is if we can get a nice strong signal here with a trap, we can take this as a trap. If the market was to shoot, for example, a little bit stronger down below those lows, taking out this trend line, then what I'll do is I'll flip this into a failure pattern and look for a seller failure into pullback combination going higher. So again, there's a few different options here right now. One, as the market pulls back, will be a trap. Remember, trap patterns always have to be quick on the trigger, quick on the signal, and so we have to see a pretty good signal there coming off of that trap. That will be, of course, a trap entry we talk about in our video classes. Again, if the market was to really push through that area of support, that momentum, probably not a good time for a trap. We're going to wait for those bears to come in, see if they'll get short, try to take this thing lower, and we can use one of our failure patterns, possibly a pullback combination setup, right, for that run back up to retest the high, right? Imagine we pull back below the moving average into that area of support. Again, the bears don't have any momentum and they don't have a lot of space there to trade with. Rope in those bears with a failure pattern, hit them on the pullback, and grab that target off of the high and leave that runner up for that measured move or that pendulum swing, which is basically a measured move, right? It's basically a symmetrical move as we go higher. So as the market goes lower, that's how I want to buy it. Now, of course, how do we sell it as it goes lower? It's not going to be that easy to be a seller. The only way to really short this thing right now would be to look for the momentum to turn. And again, we know how rotation works, so we know the market's going to want to take out these lows down here. The goal will be to take out that low. What you'll have to do if we want to short this, I can't sell this first pullback. What I can do, though, is I can look for a trap setup on the way down to retesting those lows. The key here is going to be kind of threading the needle. We're going to need to see enough momentum turning for the bears and then get that pullback. And you'll notice kind of how I draw this, right? I draw it off the lows, up around that high, and that will be a great short with a trap setup coming off of that high. Now, it may simply take out those lows. We may simply hold that pullback and make a run lower. If we do get one of these 1, 2, 3, where we hold the pullback and break those lows, now we know we have a range breakout, and now I can mark up that low, I can mark up that high, and what I always do is I try to get above the moving average, trap in those buyers with a failure, and just sell right into the stop losses with a failure setup off the high of that channel. What about buying down here? And again, the sellers would love to get down to that 46.30 area. That big low down there will be an easy objective if the bears can get broken free of this trading range. As the market goes lower, can I buy down here? Can I buy? Yeah, you definitely can buy. What's the problem, though? The problem is momentum. Momentum is way too strong to be a buyer at that point. But isn't the range a magnet? It is, but we have to absorb that momentum right now. So let the bears try a couple times. Let them try twice in my book. Once they try twice, now we know exactly where their stops are, and now I can buy right into those stop losses. It's a very simple idea, right? Take out those lows, get the bears to commit a couple times. All their pain is right above that last swing, and just either wait for the signal, right, or grab that trend line off that low. There's a bunch of different ways we can take those, what we call 2-try failure patterns off of that low. And I'll tell you guys, we use a lot of failure patterns in our trade room. There are lots of variations, right? There's a 1-try failure, there's a 2-try failure, there's trap failures, a lot of variations. I love when I can kind of trap traders on the wrong side of the market and use their stop losses as kind of fuel, if you will, right? And that's exactly what this type of setup is going to do. And guys, I have literally hundreds of examples of failures, traps, pullback setups, all my favorite price action entry patterns. I cover all the smaller details for this stuff inside of our quick start class. What I'll do is I'll put a little link for you in the upper right hand corner. If you haven't grabbed it yet, grab that little free quick start class, and just like it sounds, it'll be a quick, nice little shortcut course to bring you up to speed so you know how to find the right levels of support and resistance, which entry patterns to use, and most importantly, when to sit on hands to avoid trouble. You're going to love that video course, so grab that link popped up in the upper right hand corner. It's free on the website, and you'll get a good roadmap to follow. That same roadmap we follow every day in our trade room. Now, what if we go higher here? What's the game plan as we go higher? Well, we know the market probably wants to take out that pendulum swing. If we can break through it, we successfully have a breakout, right? Broken pendulum, it usually means a broken trading range. So imagine now if the market keeps on going higher. There's one thing I would keep in mind, right? If we keep kind of grinding higher here, I'm just going to keep that channel, right? I'm going to keep that channel updated. I'm going to keep looking for those deep pullback traps, those seller failures, and those pullback combinations. Right? And again, I know I'm talking different language right now, right? Deep pullback traps, seller failures, pullback combinations. If you're taking the free quick start class, you know what I'm talking about. Don't worry so much about where we are, because at that point we get a lot of momentum, right? A lot of momentum is a very good chance that we get that we get a retest of that high. In the event where the market was to really pull back, for example, so look at that trend line, right? Bears try once, bears try twice. There's that variation and that two try failure. So a lot of it has to do with kind of how the market pulls back right off this high. Could I sell it as we go higher? Could I sell it up there? You can, but it's really going to be difficult because, again, a lot of momentum. The only way to sell the market as it goes higher would be to use that same two-try failure. But in this particular situation with so much momentum and arguably some rising support in the way, you're going to want these buyers to not only try twice, but you'd really want to get a trap entry to avoid any rising support trend lines that are going to be coming up here. So that's the easiest way to short this thing as we go lower. We may also see a breakout going higher, and there's a lot of different breakout patterns that we can use. For example, the market may open up and really run higher. If it really runs higher, find a new channel by marking off that high, mark off that low, drill down to your faster time frame. Keep in mind, this is a 6,000 tick chart. We're not going to day trade off a 6,000 tick chart. We'll use a much faster time frame tomorrow morning in our trade room. But again, you look for those traps, those failures, those pullback combinations as we come off the low of that channel. Another one of my favorites, which is definitely on my radar for tomorrow, especially because there's potential for a big short squeeze going higher, would be a two-try breakout or two-try trap. Strong move up, shallow pullback, higher high in price, traps, baby. That's always one of my favorite entries if we get a real strong push, right? Real strong push, shallow pullback drives the buyers crazy, higher high confirms the move. That trap is an easy money trade as we try to make our way, again, back up to our next levels overhead. One more thing to keep in mind is that if we do see a strong move up, that will become the breakout leg. Okay, whenever we see a breakout leg, the breakout leg becomes a symmetrical measuring leg. Okay, it's just we saw today on oil with that news breakout. Okay, so if we do see this thing really punch, keep an eye on the size of that leg, and that's going to create that measured move, that ABCD, and that will help give you an idea of where this market is probably going to be headed. We have a general idea, right? We have a general idea of where the market wants to go, but if we were to see, for example, this thing to really punch like this, right, that would tell me now that the size of that leg is probably going to be our measuring leg going higher. Now, of course, I'm sure there are some things I've missed tonight for the S&P. Tomorrow morning, though, we'll make sure we nail it all down in the trade room. Let's keep going. How about some NASDAQ? NASDAQ is similar to the S&P, but you can definitely see there's a little bit of a difference here, right? The S&P is above the range right now. NASDAQ, I'll tell you, NASDAQ has a lot of potential going higher here. You can see the market, right, of course, and we talked about this last night, big wild day yesterday. It's not surprising to see a range the following day. Remember, anytime you see a bunch of movement today, the following day is oftentimes a range. It's like if you ran a marathon today, you probably will be taking some time off tomorrow, right? Resting your legs tomorrow. Same thing happens in the financial markets. So we begin the day in a range. The market pops up and pummels, right? Going lower here around 10 o'clock here this morning. They get a strong move down. Anytime we see a strong move down, the odds are pretty good. We can find a channel and we can sell that first test for a retest of that low. This is classic stuff we talk about, by the way, inside of that free quick start class, right? Anytime we see a strong move in one direction, we know the odds are pretty good if we can get above the moving average, get those buyers to try to buy it, and we can sell right down to retest the low. The sellers, of course, complete their objective, as we always say. They retest, they close the loop, if you talk the lingo here on this newsletter, and then we get this beautiful 1, 2, 3 reversal, and you can see how the market's kind of grinding higher here right now, right? This is kind of what I talked about on the S&P before. If it grinds higher, just mark off that trend line, find those lows, and then same thing, right? Look for those traps, those lows, right? Traps into failures into pullbacks, and pullbacks, right, into a retest of the high, and in this point, right, another move up to that 16,400 and change up there. This is kind of the same thing we just talked about in the S&P, right? But the S&P was quite further up the ladder here. The reason why I said the Nasdaq has a lot more potential, maybe not more than the S&P, but it has quite a bit of potential here is because not only do we have momentum for the bulls, but this thing appears to be just getting started right now. We get a range as a magnet. We know that ranges love to rotate, and so we expect that rotation to want to complete that rotation back around that 16,541, right? That'll be an easy kind of objective here for us. And I would imagine Friday's close, that 16,588 and a quarter, I would imagine if they can get that pendulum swing, they're going to take out Friday's close. So keep that 88 and a quarter level on your radar. The buyers would love to get up around that 750 area. That, of course, is Monday's high. We'll see if they can get. We'll see if that might be a little more than we can bite off tomorrow. But I would imagine though, if the buyers can get this thing going, that pendulum swing and Friday's close should definitely not be out of the question here for the buyers. So this is quite similar to the S&P in the sense that the buyers have control. We definitely have some, rising support trend lines. They're going to keep those bears honest right now. Like I mentioned on the S&P, I've got that channel drawn up. I love these traps, right? Little trap set up, right? Get my failure and my pullback combination. So a couple different setups. We can use trap, failure, pullback combo. Be aware too, there may be a larger channel out here somewhere, something like that. If it really was to pull back really deep, okay, no, I'm not going to short it just yet. I'll look for that 2-try failure, right? Bears try once, bears try twice. How do I know when to let them try twice? Whenever that pullback is really strong. And we'll talk about kind of what I mean by really strong in the video classes I mentioned earlier, right? So 1 try, 2 try, and then a lot of times when you get those really deep pullbacks like that, they snap up and they go right into a trap setup on the way back up to retest the high, right? They want to go back and retest the high, right? Leave a runner back to the major high. So again, 2-try failure, buying the failure, right? And then buying the trap right below that prior low. And again, there's a lot of examples of these setups for my favorite futures markets inside of that quick start class. Okay, so that's how I want to buy this thing as it pulls back right now. Now, what if it goes lower? Could I sell this thing as it goes lower? You definitely can, because obviously there's a lot of bearishness overall. So if the market was to, for example, hold on that pullback and make a run going lower, it's the same basic idea as we talked about on the S&P. We have to get enough momentum to give the bears control again. So I'll look for that 1, 2, 3 reversal, but then I have to get an entry, and I'm not going to want to sell very low down here because, as you can see, those lows are right there. This is kind of one of those thread the needle trades, right? We have to get enough momentum to give yourself an edge, right? To give yourself some sort of opportunity here, and then find the trap, which will usually be your best bet whenever you're trying to avoid selling into the lows, right? Like in this example here. So that's definitely something I'm watching for as we go lower. And then again, if we end up down around those lows and the bears want to take this thing lower, just like the S&P, we've got some big levels down here. So if the market really wants to keep on pushing lower tomorrow, got that big round number at 16,000, got that 15, right? That 15,900. If the bears can get their hooks in this thing, again, we've got a short potential here with a trap going lower, right? Get that correctly there first, right? That trap going lower, right? But now think about it this way. If they can hold that pullback and keep this thing going, there's a couple ways you could think about this too. There's a lot of variations of this, obviously. The markets are never, black and white. So, maybe we sink back down, right? Maybe the market kind of grinds lower. You know what I mean? Mark up those lows, mark up that high, right? This could also work for the S&P, by the way, right? Find that, find that trap, get that moving average underneath it, get that buyer failure, you know what I mean? Trap, failure, pullback combination. I know I'm sounding like a broken record right now, but I'm telling you guys, once you learn what works, you're not gonna change a thing. You'll be like me. You won't change a single thing about it. So if it does push and start to grind down like that, find that new channel. Remember, don't worry about where you are. If you have enough momentum going lower, the odds are stacked in your favor that test at the high of that channel will make, at the very least, back to retest the low. It could be something like this: strong move down, right? Pull back to the moving average and jump through that low. That's fine too, right? That's a 1, 2, 3 breakaway move, right? 1, 2, 3 reversal. Mark up that low, mark up that high. Again, remember, first test is always the best test. I'll find that trap. I'll find that buyer failure. I'll find that pullback combination coming off the high of that channel. And again, I'm just simply marking the charts up right now. I show real examples of those pattern setups, the traps, the failures, the pullback combos. They're all included in that quick start class that I mentioned in the upper right hand corner. So now we kind of know how to trade this thing, right, as it's going lower. We get a pretty good idea of where the market may want to go if it does go lower. How do we trade this if we go higher? Now, as you can imagine, we might get stuck inside this range. Probably not, but if we do, it's a bull market into a trading range. What's the game plan whenever you see a bull market into a range? You find levels of support underneath the range, right? You wait for the pullback. We do not try to pick a bottom. Right? A lot of times what will happen is you'll go, okay, here's my support level down here. I'm going to buy that support level. What happens is you buy it, but then what happens is the moving average comes over, the bears come in, they sell it, you get stopped out, and then it just runs without you anyways. It's very difficult to pick a bottom. It's just always difficult to pick tops and bottoms. So I never try to pick that bottom here. I wait to see bears come in and short off the moving average. Once they do, again, we have all of this momentum. The range is the magnet. Think about where their stops are and just buy right into those stop losses. Very, very easy. It's a very easy plan of attack there when you have a trading range. Now, there are a couple more variations of this. I'm going to talk about that on the oil, because oil has a pretty well-defined, maybe not that well-defined, but it looks like oil is going range-bound as we go into tomorrow's trading session. So I'm going to add more to this kind of setup sequence on the oil chart. So make sure you keep on watching on that. What is more likely here is the market continues to kind of flutter higher. Right? Flutter higher. Keep that channel drawn on. Find those traps, right? Trap, failure, and then pullback combination, right? Get underneath the moving average. That's where the money is, right? That's where the money is. Get underneath the moving average. That gives you those traps, right? Below prior swings, those failures, those pullbacks as we go. What if we really pop? What if we really pop and run higher here? You know, for example, right, we may see it pull back at that trap and really pop and run higher. We know where the market wants to go, right? It wants to grab that pendulum swing. So mark up that high, mark up that low, drill down to your faster time frame and find the entry, right? Grab that trap, that failure, that pullback, right, off the low of that channel. Or maybe it really pops and runs higher, strong move up, shallow pullback, higher high in price, traps, baby, right? That's the one you want right there, right? So now this one, it really pops up. Now, if you can find a channel, even better, right? Is that off the low of a channel? Even better. Not required, but think about where that channel could be. Strong move up, shallow pullback, higher high in price. That trap is a money trade on the way up, again, on the way up to that pendulum swing. So just keep that in mind here, right, as we go higher. I would be very careful selling this market as it goes higher here. I would make sure here that we take out that high first, and then buyers try once, buyers try twice. That same idea, but we got to get a trap on this. I would really want that two-try failure with that trap to sell this thing back down again. And then if we can get that short going lower, I can oftentimes find a new channel, draw off that low, and then grab that short right off the first pullback. Remember, the first test is always the best test, right? So if we go up take out that prior high, the buyers give me a couple swings at this and they fail to keep it going lower, get that nice juicy trap set up off the high. Again, there's a lot of variations of this pattern. Sometimes trend lines make sense. Sometimes it's just simply sell into those stop losses. You'll see more details on that inside the quick start class. But again, you want to wait for those buyers to really commit on this because we're so bullish. And again, there probably will be some trend lines coming up here. So you're going to want to have to make sure you get around those trend lines. And usually traps are going to be the best way for us to do that. That's how I want to sell this thing, right? Coming off of that high. And then again, mark that low, right? Mark that new channel, drill down to your faster time frame. That is oftentimes the bigger money trade right there. It can be difficult to get the confidence to short off that high, right? A lot of times once it turns over, everybody will plow into that first pullback because now the writing's on the wall, right? Now the bears have taken back control. We assume they want to go back down to retest the low. And of course, again, that little first test of that channel back here is a really good money trade off the high of that channel. That's kind of a way to think about it, right, as we go. Most important thing right now is kind of wait and see what this market wants to do. If it wants to pull back, give us those failure patterns to keep it going higher. If it wants to keep going higher here, keep that channel drawn up, right? Keep that channel drawn up. And then we can go forward from there. Let's keep going here. Let's wrap it up with the oil here tonight. Oil, of course, we had some news that came out this morning in the pre-market regarding the strategic petroleum reserve. You would have thought that if they released some of our emergency only oil reserves, you would have thought this market would have gone lower. The problem was they didn't exactly, I think, anticipate that the markets would laugh at the fact that they'd only cut 50 million barrels. We alone in the U.S. Consume 20 million barrels per day. So they literally covered 2 days of consumption. Now China comes in, South Korea comes in, a couple other countries have now come in, but it doesn't look like the market. It doesn't look like what it looks like is the market almost laughed at this kind of emergency oil reserves, and the market maybe not laughing at it, but the market may have looked at this as a bit of a warning sign that if they are releasing these strategic, these what should be used in an emergency, it's the first time the U.S. has ever done this without there being some state of emergency right now. So pretty incredible. Anyways, the news jump, right? The news, of course, gets bought. Now, there's potential for tomorrow, right? Maybe we do end up tumbling. Maybe this is just one of those pump and dumps, right? Where the market makers pump it right up, get all the retail traders to chase after it, and they dump it back down again. So that may be the case here. But I think the market right now look at that and said, boy, we must be worse off than we thought we were if they're releasing stuff from the SPR. So anyways, long story short, what's the chart tell us right now? We are bullish. It looks like we have a range going on right now, right? Market takes off to the upside. Anytime we have a strong move in one direction, we expect a pullback, that failure, that pullback combination, and we expect that retest of the high. At this point, it's kind of put up or shut up right now. It's show me what you want to do right now. I would imagine the market will want to break out and go higher here, right? If the buyers can take it higher, get that 80 level waiting up overhead, get some major tops up there. I think 80 will be a good round number to keep up as a target as we go higher. If the market pulls back, again, this becomes a range, right? So of course now looking for buy setups on the pullback. If the bears could take control, yeah, they're going to want to get back down to last Friday's close. That was that range we started off this morning. And of course, the news, of course, shot things higher here. So we're definitely bullish. It looks like right now we are bullish into a trading range. When it comes to a bull market in a range, let me get rid of that channel here for a second because it's not quite the most important thing just yet. What you want to do is you want to find levels of support below the range. I really like this area right here because this, of course, that 77.5 area, prior high, right? Prior high, underneath that low, That 77.60 area just looks like the sweet spot here for these buyers. What you want to remember is you want to get underneath the range. The range acts like a magnet. Get those sellers to get trapped, right, with a failure pattern, and then trade that rotation. As we roll higher, find that new channel, buy that first pullback. And where's the goal? Where does the market want to get to? The market wants to get back up to retest the high, but more importantly, it wants to complete the pendulum swing. And so that's now where the market wants to go. We oftentimes will see stuff like this, where the market will jump off the moving average, and then right before the pendulum swing gets hit, we see a trap entry, right? A little trap set up there, right? So we go below, it's a seller failure. And this first pullback, this could be a failure setup. It could be a pullback entry. This is a 3,000 tick chart, right? But you can definitely buy the first test of that channel. And again, that trap entry on the way up to completing that pendulum swing, right? That's the general idea of how I want to buy this thing, right, as it goes lower. Now, if it really shoots lower, right? If it really shoots low, remember, in those situations, let those bears try once. Let them try twice. Then hit the stops, right? Then hit the stops. And then as we go higher, right, find that channel off the high, mark off that low. Again, maybe we see a little trap entry here, right? Trap entry, failure, pullback, right? Any of the price action entries we talk about in the quick start class, that'll work as we go, right? So again, 2-try failure. Why 2 tries? Because the strength of that pullback. The range acts like a magnet. We wait for the bears to try a couple times. Maybe it's a trend line. Maybe it's a trap entry. Again, a lot of variations of this 2-try failure. You'll learn that stuff in the quick start class. And then again, we've got that, right? Failure, trap, failure, trap, failure, and then pullback as we go up and try to complete that pendulum swing. As we go lower, how do the bears take control? The bears have to hold a pullback, right? So one would be a nice deep pullback, get down to our support, let the bears come in, have them hold the pullback. 1, 2, 3 reversal. Okay, I'm not going to sell the first pullback because we're too bullish right now. Once those bears can hold and really jump off the moving average, now we know they're going back to that Friday's close. Mark that low, mark that high, drill down to your faster time frame, grab your traps, your failures, your pullback combos, your strength moves off the high of that channel. Easy money off the high of those channels as long as you have a good quality entry trigger. Another thing to look for, right, would be a strong move down and then a grind down, right? Grind down. When that happens, mark that low, mark that high, and you got it, right? Get above those prior swings, get above the moving average, trap, failure, pullback as we go lower. Don't be afraid, too, if it really pushes lower here. Strong move down, shallow pullback, lower low in price. That trap is an easy money trade as well above that high. And this could be here, it could be here, it could be really anywhere, right, as the market rolls lower. If you have enough strength and you have a good signal, you should be just fine, right? So we're looking at that now, buying the pullback right now underneath this range. And if it really turns the bears, selling it, right, as we get down or as we try to make our move back down to retest a low. Let's talk about as we go, and of course, going sideways, right? We're going to sit on hands and do nothing there. I had that channel on here earlier. Let's add that channel back on here. I wanted to kind of make a point on this, that because we have the bulls in such control right now, if we were to go higher here, right? Go higher here now and then roll back below, right? Failure, 2-try, pullback, combo, right? Think about how that might work, right? So we go higher. We don't blast higher, but we find a new channel. We pull back to the low of that channel. Now you got to be concerned, obviously, with this range, right? And that's why I say let them try twice and then buy the stops, right? And then buy that pullback. That should be a pretty good trade right there, right? Now, this could obviously get a lot better, right? Maybe it really punches here and runs. In that case, draw a completely new channel, right? So it really does, right? Let's say, for example, it says, heck with you guys, I'm getting out of here, and it makes a run going higher. Don't be looking for this big wide. I mean, I would love to think we're going to get that pullback, but it's probably not going to happen, right? That 80 level overhead is just too juicy of a magnet. I'll mark up that high. I'll mark up that low. I'll try to get underneath the moving average. Being underneath the moving average allows me to trap in the opposite side of the market. It also allows me to have a small amount of risk for a large amount of reward, right? When you have momentum on your side, an easy or reliable level of support and resistance, and you're able to risk small to earn large, that is a recipe for success, right? Call that your Thanksgiving recipe, right? For winning trades ahead of the holiday, right? If you got good momentum, a good quality level of support or resistance in a trending market, I like to use channels, and you get a good signal that allows you to risk small to earn large, that is the recipe that is just built for success long term as a trader. Anybody can get lucky every once in a while, but as long as you focus on going with momentum, finding a low risk, high reward trade off a good level of support or resistance, in this case support, you've got yourself a recipe for Thanksgiving success, right? So think about that as we go higher. And again, same thing, right? If we pop up, strong move up, shallow pullback, right? Higher high, don't be afraid of that trap, right? Don't be afraid of that trap. Remember, if we have enough momentum, hell with with where we are. It doesn't matter where we are. If you have enough momentum and enough momentum, shallow pullback and a higher high, take that trap, right? It may not go forever. It may not go, but it's going to at least go back and retest that high. It'll be at least enough to get you some money out of that trade, and who knows? A lot of them will keep on going for the whole morning, right? So grab that long from there. So that should cover it for us, here right now. There's a lot of the variations, right? Like that high right there, maybe it pops up on strength, right? Maybe it pulls back right away. We trap in those bears, right? For that kind of breakout pullback. You know what I mean? Like that could be easily what happens tomorrow too. We break out, we pull back right away. We're riding off the top of that range right now. It's a failure pullback combination. Remember, the breakout leg is the measuring leg, right? Remember, the size of the breakout leg is almost always going to be that ABCD measuring leg. I could definitely keep on going tonight. I got a lot more I want to share, but we'll save the good stuff for tomorrow in our trade room. Speaking of trade room, don't forget, 8 o'clock Eastern time. Don't miss the final day of the week in the trade room tomorrow morning. I know we're all excited about the Thanksgiving holiday. I certainly am. My favorite holiday of the year. But we got one more day left. Got to make our stuff and money tomorrow morning at the opening bell. We'll be there tomorrow morning, 8 o'clock Eastern time. I'll put all the membership details in the description of the YouTube video. I'll put a big button for you, Blow Me Tonight, on the website. Also, don't be afraid to call the office. I'll be here to answer the call, answer questions, help you get you moving in the right direction. Brokers, charts, data, indicators, whatever questions you might have on that. So don't be afraid to call the office. We're always here to help as well. But guys, that's it for me tonight. That's it for me. I've taken up way too much of your time already. Have a fantastic weekend or holiday. If we don't see you guys tomorrow morning in the trade room, be safe out there. Don't eat too much. I know. Enjoy yourself. Enjoy time with family and friends. Have fun. Be safe. And we'll see you guys after the holiday if we don't see you guys tomorrow morning in our trade room. As always, guys, my name is Joseph. Thanks for tuning in. We'll see you guys next time. Adios, amigos. Bye-bye for now.